The Elder Care Protection Bill has just passed, and if you are over 60 or if you have a parent or grandparent who is, there are things inside this legislation that directly affect your monthly income, your prescription costs, your safety and care facilities, and your life savings. And here is something important to understand from the start. Not every benefit in this bill is automatic. Some require you to take action, some have deadlines, and some require you to update your information with the right agency before a certain window closes. So let's walk through what this bill actually contains, what it means in practical terms, and what steps you should be aware of. For years, seniors across America have been dealing with prescription drug prices that made little financial sense, nursing homes with minimal accountability, cost of living adjustments that did not reflect real expenses, and a growing wave of financial fraud targeting older Americans. These were not minor inconveniences happening at the edges of society. These were serious, ongoing crises playing out quietly inside millions of households across the country, affecting people who had worked their entire lives, paid into the system faithfully, and expected a basic level of security in return. The fact that it took this long to address them at this level is worth acknowledging. But the more important conversation right now is what this bill actually does and how it affects you specifically. The Elder Care Protection Bill is one of the more comprehensive pieces of senior-focused legislation to move through in recent years. It touches healthcare, housing, finances, mental health, caregiver support, and personal safety. Each of those areas has specific provisions, specific timelines, and in some cases, specific actions required from you. The details matter enormously, and that is exactly what we are going to walk through today, section by section, in plain language. A lot of people will hear about this bill in passing, catch a headline or two, and assume they have a general sense of what it means. But general awareness is not the same as knowing what to actually do. So stay with this because what comes later in this breakdown is just as important as the headlines. Starting with prescription drugs, because this is one of the areas where the financial impact is most immediate and most significant for the largest number of people. For a long time, Medicare was not permitted to negotiate drug prices directly with pharmaceutical companies. Think about what that actually meant in practice. The single largest purchaser of prescription medication in the entire country, a program covering more than 65 million Americans, was legally blocked from using its size and buying power to bring prices down. Private insurance companies could negotiate. The Department of Veterans Affairs could negotiate, but Medicare could not. The result was that seniors in the United States were routinely paying dramatically more for the exact same medications available at much lower prices in Canada, Germany, the United Kingdom, and dozens of other countries. The same pill, the same dosage, the same manufacturer, sometimes 5 or 10 times the cost on this side of the border. Under this bill, Medicare can now negotiate prices across a broader list of medications, and those negotiated prices are set to take effect on a faster timeline than previously planned. For people currently spending $200, $300, or $400 a month on medications for diabetes, blood pressure, arthritis, or heart conditions, this has real potential to reduce those costs in a meaningful way. We are not talking about minor adjustments. For some people managing multiple chronic conditions, the savings could be substantial enough to change monthly financial decisions in a significant way. The bill also establishes an annual out-of-pocket cap for Medicare prescription drug spending, meaning there is now a hard ceiling on what you will pay in a given year, regardless of how many medications you take or how expensive they are. For millions of seniors who have had to make painful choices between filling a prescription and covering other basic expenses, that cap is not a bureaucratic detail. It is a genuine financial protection that changes the equation entirely. It is also worth understanding how these drug pricing changes actually get implemented so you know what to expect. The negotiation process does not happen all at once. Medicare works through a list of qualifying medications, prioritizing the ones that cost the program and its beneficiaries the most. That means some drugs will see price reductions sooner than others. If you want to know whether a specific medication you take is included in the current negotiation cycle, you can check directly through the Medicare website or ask your pharmacist. Your pharmacist, by the way, is one of the most underused resources available to seniors navigating these changes. They understand formulary structures, they know which alternatives exist at lower cost points, and they can help you understand exactly how these changes affect your specific prescriptions. Do not hesitate to have that conversation. On Social Security, the long-standing frustration has centered on the inflation formula used to calculate the annual cost of living adjustment, referred to as COLA. That formula has traditionally tracked the spending habits of working-age urban employees, which does not accurately reflect how most retirees actually live and spend their money. Seniors typically allocate a far larger portion of their budget to healthcare, prescription medications, and in-home assistance. Those categories tend to rise in cost faster than almost anything else in the economy. So even when the annual COLA appeared reasonable on paper, it was consistently falling short of what seniors were actually experiencing at the pharmacy counter, at the doctor's office, and in their monthly bills. Over a period of years, that gap compounds into a real and meaningful loss of purchasing power. This bill supports shifting to a dedicated inflation index that better reflects actual senior spending patterns. What that means over time is that your annual Social Security adjustment starts to match more closely what your life actually costs. Even a modest improvement in this calculation applied consistently year after year adds up to a meaningful difference on a fixed income. The bill also addresses longer-term concerns about Social Security's funding stability. For years, projections indicated the trust fund could face significant pressure in the mid-2030s, which under existing rules could have triggered automatic benefit reductions. Nobody wanted that outcome. The bill works to strengthen the funding structure by adjusting the payroll tax cap so that higher earners contribute more proportionally into the system. This helps stabilize Social Security not just for current retirees, but for the generations that come after them. Something that does not get discussed enough when people talk about Social Security is the compounding effect of even small adjustments over a long retirement. If you retired at 65 and live into your mid-80s, that is 2 decades of monthly checks. A modest improvement in how your annual adjustment is calculated does not just affect this year's check. It affects every check for the rest of your life, because each year's adjustment builds on the previous one. Over a 20-year retirement, the difference between an accurate COLA and an inaccurate one can add up to thousands of dollars. That is not a small number for someone living on a fixed income, and it is exactly the kind of long-term impact that this bill is trying to correct. When it comes to nursing homes, the reforms in this bill deserve far more attention than they typically receive in mainstream coverage. Facilities that accept Medicare and Medicaid funding, which represents the vast majority of nursing homes operating in this country, are now subject to significantly stricter minimum staffing requirements. There must now be a defined number of trained caregivers available per resident at all times. This sounds like regulatory language, but in practical terms, it means that your mother, your father, or your spouse living in one of these facilities will have a real person available to help them when they need it. Understaffing has been consistently documented as the root cause of neglect, delayed care, medication errors, and safety failures inside care facilities across the country. This bill takes direct aim at that. The financial penalties for safety violations have also been raised substantially. In the past, fines were low enough that some facilities simply absorbed them as a predictable operating cost and changed nothing. That calculation no longer works. Penalties are now significantly higher, and repeat offenders face the real possibility of losing their Medicare and Medicaid funding entirely. For most facilities, that is not a manageable consequence. It is the end of the business. That creates a genuine financial incentive to follow the rules, maintain proper staffing, and treat residents with the dignity they deserve. There are also new transparency requirements that require nursing homes to make their inspection reports, staffing levels, and full violation histories publicly accessible. When you or a family member is researching a facility, you will now have access to real, verifiable information rather than relying solely on what a facility chooses to present in its own marketing. If you have a loved one currently living in a nursing home or assisted living facility, there are practical things you can do right now with this new transparency in place. You can look up a facility's inspection history through Medicare's Care Compare tool, which is available on the Medicare website at no cost. It shows staffing ratings, health inspection results, and any penalties a facility has received. Under the new requirements, that data will be updated more regularly and made more comprehensive. Use it. When you visit a facility, ask staff directly about their current staffing ratios. Ask how often residents receive one-on-one attention. Ask what the process is for reporting a concern. A facility that welcomes those questions is behaving very differently from one that deflects them. Elder financial fraud is another area this bill treats with the seriousness it has long deserved. Older Americans lose tens of billions of dollars every single year to scammers and financial predators. The tactics vary widely. Fake calls from people pretending to represent government agencies, Medicare billing fraud, investment schemes that seem legitimate until they are not, romance scams targeting people who are grieving or lonely, contractors who collect a deposit and vanish, and in some cases, exploitation by people the victim trusted completely, including family members or caregivers. The emotional damage from these crimes is often as severe as the financial damage, and victims frequently feel too ashamed or disoriented to report what happened. The bill creates a dedicated funding stream for federal investigators specifically trained to identify, pursue, and prosecute these cases. It strengthens coordination between federal agencies, state law enforcement, and financial institutions. Banks and credit unions are now encouraged and in many cases required to flag suspicious activity in accounts held by seniors and to follow specific reporting protocols when potential exploitation is identified. A sudden large withdrawal, multiple wire transfers to an unfamiliar account, a new name added to a long-standing account. These are patterns that banks are now empowered to act on rather than simply observe. Public awareness campaigns are also funded under this bill because when people understand how these schemes work, they are far less likely to fall for them. One of the most important things you can do to protect yourself from financial fraud right now is to establish a trusted contact person with your bank or financial institution. This is someone the bank can reach out to if they notice unusual activity on your account. It does not give that person access to your money. It simply gives your bank a point of contact if something looks wrong. Many banks already offer this option, and the process takes only a few minutes. If you have not done this yet, it is worth doing soon. It is one of the simplest and most effective protective steps available to you. On housing, the bill significantly expands funding for home modification assistance. Most homes are simply not designed with the later stages of life in mind. Stairs that were never an issue become daily hazards. Bathrooms without support rails become accident sites. Doorways too narrow for a walker or wheelchair become barriers to independence. The cost of making these modifications safely has historically been out of reach for many retirees living on fixed incomes. Through grants and low-interest loan programs, eligible seniors can now access financial assistance to install ramps, widen doorways, add walk-in showers, improve lighting, and make other safety upgrades that allow people to remain in their homes rather than moving to a care facility before they are truly ready. There is also broader investment in accessible, affordable senior housing designed around both physical safety and social connection, because isolation in older adults carries documented health consequences that extend well beyond emotional well-being. If you are interested in finding out whether you qualify for home modification assistance, the best starting point is your local area agency on aging. Every region of the country has one, and they maintain updated information on which grant and loan programs are currently accepting applications in your area. Some programs are federally funded, some are state funded, and some are administered at the county level. An area agency on aging counselor can help you identify which ones you may be eligible for based on your income, your living situation, and the specific modifications your home needs. This service is free and available to anyone over the age of 60. Medicare coverage gaps around dental, vision, and hearing have been a point of frustration for a long time. Original Medicare still does not cover routine care in these areas, and the consequences of leaving them unaddressed are not cosmetic. Untreated gum disease has been connected to serious cardiovascular and cognitive health complications. Vision problems increase fall risk significantly. Untreated hearing loss has been identified as one of the most significant modifiable risk factors for cognitive decline. This bill does not fully close the coverage gap, but it does include subsidies to help offset hearing aid costs, pilot programs expanding dental access through federally qualified health centers, and expanded vision care through community health programs. It is a step in the right direction, even while the broader policy conversation continues. The bill also includes meaningful steps to improve mental health access for Medicare beneficiaries. Many mental health providers currently decline Medicare patients because reimbursement rates are too low to make it financially workable. This bill works to raise those reimbursement rates and expand telehealth options so that seniors in rural areas or those with limited mobility can access counseling and mental health support from home. Grief, chronic pain, the anxiety that comes with aging and loss of independence, these are real and heavy burdens that deserve real and accessible support. And for a generation that grew up being told to push through difficulty without complaint, having better access to professional support is not a luxury. It is a meaningful quality of life issue for the millions of unpaid family caregivers across the country. Adult children, spouses, siblings, and close friends who have taken on the responsibility of caring for an aging loved one. This bill offers new tax credits to help recover some of what they spend, funding for training programs so they can manage complex care situations more safely and confidently, and expanded respite care options so caregivers can take necessary breaks without disrupting the care their loved one depends on. Caregiver burnout is a well-documented and serious problem, and a supported caregiver consistently provides better care. This is one of the first major legislative efforts to recognize that reality in a concrete financial way. If you are a family caregiver, start by keeping detailed records of what you spend on caregiving. This includes transportation, medical supplies, home modifications made for your loved one, and any professional services you coordinate or supplement. When tax credits become available, having organized documentation makes the process significantly easier. It is also worth connecting with a local caregiver support group, not just for the emotional benefit, which is real, but because other caregivers are often the best source of practical, up-to-date information about what programs and resources are available in your specific area. Now for the action steps, and this part matters just as much as everything that came before it. Start by visiting the official Social Security Administration website or contacting your local Social Security office to confirm whether any updates or actions are needed on your end. Every state has a state health insurance assistance program, known as SHIP, which provides free and completely unbiased Medicare counseling. Making an appointment with a SHIP counselor is one of the most practical things you can do right now. These are trained professionals whose entire job is to help people in exactly your situation understand how changes like these apply to their specific circumstances. The service costs nothing, and you do not need to prepare anything complicated before you go. Just bring your Medicare card, your current list of medications, and any questions you have written down in advance. One important caution that cannot be overstated. Whenever significant legislation passes, scammers respond quickly. You may receive phone calls, text messages, or emails from individuals claiming they can help you apply for new benefits under this bill and asking for your Medicare number, Social Security number, or banking details in the process. That is not how legitimate government programs work. Official government services are always free. The Social Security Administration does not call people demanding immediate action. Medicare does not request payment information over the phone. If any contact feels even slightly off, end it immediately and reach out to the official agency directly using contact information from their verified government website. And if someone you know, particularly an older family member, mentions receiving one of these calls, take it seriously and help them verify the contact before they share any information. This legislation represents a genuine and substantial effort to address issues that have gone without serious policy attention for far too long. Implementation takes time, and there will be ongoing debates about funding, enforcement, and the details of how specific provisions get carried out. But the framework is in place, and that matters. Staying informed about how these changes unfold, knowing what steps may be required from you, and being aware of the risks that come alongside major policy shifts, that combination of awareness and action is the most practical thing you can do right now to make sure you and your family actually benefit from what has been put in place.